All right, hello everyone. Happy Tuesday. Welcome to today's weekly market check-in with myself, Greta Wall, and David Prince, the leader of T3 Live's Inner Circle virtual trading floor. How's it going today on this Tuesday, David?
Good. A bit quiet, as this week normally is.
Yeah. All right. So today's topic is your Nvidia earnings game plan. So we want to talk through what David is planning for the print tomorrow after the market close. This is, of course, the biggest catalyst for the market in the past few weeks since, of course, the crash that happened at the beginning of the month. But everyone's been waiting for Jackson Hole last Friday, and then now Nvidia, kind of the finale for the month here. All right, so Nvidia does report earnings after the close on Wednesday. These are the expectations. Revenue is supposed to rise or expected to rise over 100% year over year. Earnings expected to be up over 140% year over year. There will, of course, be a lot of focus on the Blackwell processor delay and what the company has to say about that. And then, of course, what Jensen's message is about the AI space overall. Of course, Nvidia being the leader in AI for the space in general. And then what will this report, of course, signal about the large caps in general? So what are you focused on, David, as a trader heading into this report? And then we can get into more details. I'll ask you more questions. We'll have a conversation here just about Nvidia for a little bit.
Probably most focused on the market response. I think it tells us a lot about the stock, tech, the Qs, and maybe even a little bit about September, which is typically a difficult month. So how the street reacts to a less than perfect report or a perfect report probably is what I'm most interested in, way beyond whether they raise guidance by X amount. It's really, what does the street need and how demanding is the street in terms of the stock price?
When it comes to what Nvidia has done into this report, how's the chart looking for you? Would you say the risk is more to the upside or the downside for Nvidia specifically?
This is a really easy one. So I typically I'm pretty basic, right? You have a stock that ramps up into a report that has, let's say, a less than cheap valuation. I'm not saying Nvidia here, but in general, I'm typically cautious. You have a decent valuation type of company that is traded off or lower into a report. Sometimes I think of it as opportunity. Here it's pretty basic. We all know 3 weeks ago, there were many people, definitely me, buying this as low as $91. Here we are, $130. So there's high expectations. Now, there'll be some people who like to be cute and say, but that was like a 2-day event and it really hasn't done anything for the past few weeks and it's off of 140. I don't really care. Here's what I care about. There was plenty of stock bought down there, right? And those people may be a bit hesitant to just go out and chase it. Therein might be the opportunity. So I think it's a tough print simply because the stock just ran up 40%. 40% on a $5 billion company or a $10 billion company or a $50 billion company is fine. They even go higher sometimes. Now, on a $2 trillion company, that's huge, right? So I think it's a tough print. That doesn't mean I don't think it can go higher, but my gut here, right, just guessing, is that call sellers and put sellers get paid. And that if there is a disappointment in terms of expectations, that it'll be a dip that most certainly should be bought. I'll definitely be long into the print. I'm still long from 3 weeks ago, but I wouldn't take a lot of risk up here. Not because I don't expect a beat and raise. I firmly expect a beat and raise. I just don't know if it'll be $2 billion beat, a $2 billion raise. And I think Jensen is not a hype artist. So, he has to talk about a more normal rate of growth in 2025. The comps are unbelievable, right? Going from 2023 to 2024, it was beautiful. But now we have a full year of like unbelievable quarters. So 2025 comps, it's that old thing we learned, law of large numbers. So I think the street just has to get comfortable with that. Once they do, I think the stock goes higher. And I think in terms of the business cycle, we're maybe third or fourth inning. In terms of the stock cycle, I think we're like in 7th inning, and then we're going to go back to the 5th inning, and then we're going to go 8th inning. I think the innings can keep moving. But I think the street just has to take a deep breath. And I see it on Twitter. Like a guy was not arguing with me. He was arguing with another fellow that I like on Twitter. And he's like, you don't see growth in Nvidia in the next 10 years. And it's like, anyone who really understands this understands this is not end stages, right? And that a lot of these companies like Meta are already proven that they're seeing a return on investment. Some other companies aren't. But this is going to go on for years and years and years. They're just going to be like ebbs and flows. And right now, after a 45% move from top to bottom at one point, it might be a little hard to go straight to 140. If it does, I'm happy. So my play will be to stay long stock. And if there is some sort of dip, to buy it or adjust. Now, if he raises guidance by $3 billion or more, well, then the stock is dirt cheap yet again. And I don't mind adding higher, but it's adjusting. I don't know if he would even want to up guidance that much, but it's raise guidance, I should say. But it's really just to sit and not make too much of it, because I really think this stock will continue to be a buy on dips. And for all the people that are like, well, if you don't own enough of it here, you'll miss it. Over the past year, we have had, that I can think of, because I bought them all, definitively 3 22% pullbacks, but maybe 4. So at some point in time, it might make a new high before then. There will be a spot to buy it. For me, that's like 120-ish, where the 50-day is. And like I said, I'm long stock and I'm excited for the print, but I won't make too much of it. What I will do is watch how the street reacts, what they talk about in terms of margins, how aggressive they are in going into Dell's business and Supermicro's business, and what it might mean to the margins, and if they even touch upon that, because analysts will ask, and how tough they are on pricing, because some of these companies are being squeezed. So how Dell and SMCI and MU and even a Broadcom react to this print, I'll be paying attention to as well.
You are really great at, digesting an earnings report in the after-hours session and picking up on sympathy plays with other stocks. That would think back to the Microsoft report. You saw the CapEx numbers in the Microsoft report and said this is a buy for Nvidia. Also, the Microsoft report. What sympathy plays would you be expecting to possibly be in play tomorrow after hours after the Nvidia report?
Undoubtedly, AMD now, I think, is a cleaner story. And not as an egregious valuation. You can't call it cheap, but it's not egregious any longer. I think if he really gives people the insight that this is not nearly the end of the cycle, but still very much early stages, because AMD is really small in terms of where they are in revenue, I could see AMD being a beautiful comp. There are going to be several, but AMD is definitely one. Micron is no doubt one. SMCI, Dell over SMCI. Those are some of the comps I'd look at. I think Cadence was one. There's quite a few. For me, it's going to be AMD and Dell probably that I will look at most. But even Broadcom, but AMD and Dell are probably the two that I'll pay attention to most.
Mm-hmm. We saw a major rotation into small caps out of the, well, not major, but we've seen a rotation into small caps from the large caps after the Fed turned dovish last Friday. We talked about Nvidia being the kind of end catalyst of this month, but we were really looking forward to Friday's Jackson Hole speech by Fed Chair Jerome Powell, and he came out more dovish than many expected, saying the time has come for policy to adjust. FedWatch now showing about a 65.5% chance of a 25 basis point cut, but rising bets that we could get a 50 basis point cut. That number was at 32.5% yesterday, now over 34. Personally, I don't think it's happening, but the market is anticipating at least 3 rate cuts by the year end, one at every meeting for the rest of the year. What was your reaction to what Powell had to say last Friday and how you played it with the rotation into the small caps?
I said it reminded me of an earnings report where you had to figure out where expectations were and then how he conveyed things, most of all, really not the exact sentence, but how he conveyed each sentence would be what moved things. And he conveyed things in a much more dovish fashion than I think most anticipated, certainly myself. So I said, okay, the market should continue to broaden out. By the way, the market has already obviously broadened out. Just look at Dow's performance and a lot of stocks like stocks like Triple M that we don't typically talk about. I mean, clearly it's broadened out. But beyond that, it told me, wait a second, it can broaden out to the small caps and most certainly biotech. So he was basically set up to be dovish, and I wondered, would he be dovish enough? To me, he was even more dovish than anticipated, which added some oomph to small caps and also provided a cute short opportunity early on in the Qs, which kind of what we did. Went short some big cap and added exposure in small cap. However, we are in a really tough time of year because September is really seasonal, right? And as much as he was more dovish, I'm still not in the camp that he's going to go 50 basis points. Looks like the market's not either, right? We're at 25 as far, what is it, 65, 70%. So also in taking profit mode and not just IWM to me is not, and I get it, Tom Lee's, big shot, very bright. And I don't say that like in a cute way. I mean, the guy's been just rock solid. And a guy like him is like, we're going straight to 300. We're going to 240. I have been more like, listen, I think it's going to loosen up policy, and I think it's going to be beneficial to small cap, but there's going to be ebbs and flows again. So being that we're going into a tough time of year, I have my list of small to mid caps that I like, the end phases, the sweet greens, the upstarts, which have all been working really well. But in a lot of them where we've been long, DraftKings, I can name like 20 that we've really been focused on. We've been in profit-taking mode and then wait for the pullbacks. So ENPH, great example yesterday, came into a key resistance area and has now pulled back like $12 off yesterday's high, came into the 8 and 10 day today, went long, bounced a couple points. I trimmed some. The point is, I'm not uber bullish because of Friday, but he did definitely present more dovish than anticipated. And I think the market will continue to broaden out, but just not in a straight line, especially in front of what is typically the worst month of the year.
Mm-hmm. Here's a look at what you were doing on Friday during Jackson Hole. You can see 10:12 a.m. you went long the IWM Lotto. So those were the weekly calls that were expiring that day. And you and Rick both nice quick winner on these calls following what Powell had, or during Powell's speech. Really, this is when this was happening. When we look at the market currently, as you mentioned, we're heading into it's typically seasonally slow time. August is
difficult time. This week is slow.
Right.
It's just messy. We might have plenty of volatility. I hope we do in September.
Yeah, so I was going to say this August, of course, has been different than most August. So with the start that we got, and then of course the V just recovery that we saw. Do you think that since this month was so different, it sets us up for a different September than we typically would see?
I think I'm open to be everything to be different. Election year, right? When do we see companies establish a trend that is perhaps one of the biggest trends we've ever had in history, right? In terms of AI, whether you compare it to the internet or industrial revolution. The point is, there are a lot of things that are different. It's an election year. It's Nvidia. It's AI. We just had a V bottom. So I'm one of those guys. I'm willing to learn and be open-minded. I'm definitely a little concerned because we just had this V-shaped recovery and so much money's been made. I mean, I know I don't really have to force much because my money was made over a 2-week period. I even missed some upside of the third week, but really that was the time to make money. So now I'm very picky and I'm looking for spots, and I find some cute shorts that I didn't for 2 weeks, or the 1 or 2 times I tried, I didn't do well. So my point is, up here, I don't think it's this V. I don't think it just continues. I think there'll be some ebbs and flows, and I keep using that term, but I think there'll be some ups and downs, and that's fine. It might be different. It might be a better September than what we typically see. I'm open-minded. I think a lot of it's going to come to election news, Israel news, things of that nature.
Mm-hmm. And then, of course, the Fed meeting in the middle of the month. Question we got from YouTube, and just a reminder for everyone, if you want any questions answered, go ahead and get them in now. What are your thoughts on ANF? That's Abercrombie and Fitch. It seems like it's a leader in the small caps.
Here's what I think. I think the world wants to short it and catch the top. Those are stocks that usually don't break. And when they finally do, most of the shorts have already covered and lost so much money. In terms of what they've done, it's remarkable, right? They don't have a special product. It's been around for a long time. They've clearly just figured it out in terms of the short-term trends and in terms of cutting costs so they can be extremely profitable. I don't think of it as a great investment, but I ain't fighting it. A few times I've caught a couple cute shorts. I think I'll make $10 or so and run, but it's been along on all major dips. Not one of my favorites. I don't, there's not a big, I know fashion all too well. It's a long story why, but I know what they do. I know it well. Let's just say there's no moat. Anyone can do it. Right now, they're hitting on all cylinders. I wouldn't short it, but it's not an exciting investment to me. Not based on valuation, not based on product, but I get why it's working and not fighting it.
All right, another Brian from YouTube, but a different Brian, wants to know if you have any opinion on Apple here.
Yeah, I'd say, I like to keep it real. I haven't been great with Apple recently. I was shocked. So I was shocked by the bounce after the Buffett news. Now, since then, a lot of people know if you trade actively, there's a rebalance, and it's not till the first week of September. And it is very bullish for Apple, and thus it keeps going higher. And then you have all these $150, $156 price targets out there. We have two reiterations today on the news. So here's what I think. It looks really strong. So why doubt it? It missed a lot of the bull market. It's clearly playing catch up. It has a better chart than most of the Mag 7. It's not particularly cheap, but a lot of people have high hopes on 16 and the AI they'll include. The problem is, will people be disappointed when they find out that a lot of the AI inclusion won't happen until maybe latter part of 25? So I even tried to short it once into the bounce. It didn't work. I wouldn't say I'm an expert on it. I did great in it, on that breakout over 200. Here it's a blah. It's hard to buy, but I wouldn't fight it because it's really been unbelievable. I mean, we're only a few points away from all-time highs, and it's one of the best run companies there ever was. Maybe is, right? So that's the way I look at it. I don't think there's much to do here on it. I certainly wouldn't be a buyer up here. Like, the one thing I'm comfortable is I wouldn't establish a position for the first time right now on Apple. Seems there are better opportunities.
Yeah, great. All right, another look at what's been happening inside the room. This is not your trade, but of course, I know you can opine on SMCI and what's happening with the company. Kira caught a nice trade in the SMCI puts yesterday, and you can see the chat there. SMCI puts, a great call. Nice job, Kira. Thank you for those puts. So it was a great trade for not just Kira, but also many in the room. SMCI obviously down pretty significantly today, while Nvidia is up, headed into the print. What's your read on SMCI in this current environment of
long story short? One of the top shorts on the street who has some credibility. A lot of these short report types do not, but clearly Hindenburg does. So people responded at first. The problem was the stock had been down 50 points yesterday. So, and they include some legalese now, so they do not have issues, which is basically, hey, we probably have a short position in this stock. And hey, when the stock opens down, based upon this report, we're going to be buying. So, of course, a lot of people actually are a little hesitant to short a stock down 100 points in a straight line, know they're going to be covering, and therefore we have the bounce. Yesterday, however, it was really ugly, and I wouldn't be shocked if someone somewhere knew that this short report was coming out. It's just the way Wall Street works. Anyhow, all I know is Kira identified the weakness from minute one and went short and did those puts. And I think they went up 50, 100%. And I don't know, literally like 10, 20 minutes. But there was a lot of weakness yesterday. Separate. Yeah, the market pulled back a bit. And we saw, I shorted the Qs first thing yesterday, but there was some unusual weakness in SMCI from minute one that she saw, and she attacked it. She's great at that.
All right. I want to get your thoughts on MSOS, the fund, but the fund is down over 10% today, down over 45% since May. So getting, absolutely wrecked as we kind of wait for the rescheduling possibly of marijuana by the DEA. That hearing has now been scheduled, I think, for December. So we know it's not happening before the election. What are your thoughts on MSOS and the broader cannabis?
Pretty basic. Here. A lot of hot money. It was like, all right, I'm going to play the news cycle. We're going to get it pre-election. Oops, it's not happening. They're not really investors. It's hot money looking for a pop and looking for some follow through. that money is not doing well. They're going to take losses. Now, investors who really understand the industry know that it's getting better, but slowly, meaning there's a lot of companies out there that not well capitalized, too much debt, businesses slowed just because supply demand got way out of whack, right? There was so much supply and the demand was actually underestimated or overestimated, excuse me. However, right, here's the big however. The companies that survive as all the kind of crap companies that are not well capitalized, as they go by the wayside, and there are going to be a lot of them, all of a sudden you're going to have some companies earning a lot of money because the best in breed are going to step up and they're going to be the ones that are left. So an investor would look at MSOS and probably do really well if they have 12-month outlook. A trader, it's messy. A lot of people are underwater. It'll certainly be a huge tax loss candidate. But if someone is looking at Verano or Green Thumb that MSOS represents, it's probably a great time for an investor. But that's, I've noticed I say investor. That's weeks and months, not the next like 3 weeks.
Great. All right. So tomorrow is the day, everyone. Nvidia reports earnings after the close. David Prince is very active in after-hour sessions on a day like tomorrow, analyzing the report, giving the room ideas and his read on the report and where, of course, the sympathy plays might be, what to do with the stock itself. So if you want to apply to be part of that, you can go to t3live.com/DP. You can apply for the Inner Circle to be part of Nvidia with the Inner Circle and David Prince. Any final thoughts on Nvidia before tomorrow, David?
Yeah, the market is broadened out, right? We talk about stocks like Walmart. Like Josh Brown was talking about Walmart. I didn't realize it was up 45% on the year. And we see a stock like Upstart is up over 100% in the past 3 weeks from lows. Guess what? It's the most important stock in the market, but I don't think right now it has to be the end all on the market. So that's kind of my thought. If they are good numbers, and which I think they will be, and if guidance is still solid, but it's not up to snuff for what the street needs tomorrow, that may not break the market. What may be difficult for the market is lower tech, a tough time of year, but I don't think it has to be the end all, right? Now, of course, lower numbers and a bad call, that would be different. I just don't anticipate it. But I think maybe to not decide the market is basically over or has a lot further to go because of Nvidia tomorrow, to maybe look at Nvidia as something that directs the Dells and the Qs and the MUs, but ultimately that maybe the market is a bit broader than what we've become accustomed to, and that it is not just about Mag 7 and Nvidia. Those are my final thoughts.
All right, great. All right, so David, I'll let you get back to trading for the day. Everyone else, have a great rest of your trading day. We'll be back here in a week and we can talk post Nvidia and what you did and how it went for you. All right, go to t3live.com/DP to apply for the Inner Circle. David, have a great rest of your day.
You too. Bye, everyone.
All right, bye.